Good morning. It's great to be here. You know, when you have to speak to a demanding crowd like this, you know, it's a little bit daunting. But at the end of the day, we're all in this together, right? We're all trying to disrupt. We're all trying to do interesting things. So this is actually a meeting of the minds. It's quite exciting. It's quite engaging. But when we look back in 50 years at all of the changes that will take place, I wonder how much of what we predict today at this event will have come true. You know, what will have happened? If you look back in some of the predictions that we made 15 or 20 years ago, some of the stuff we got right. Do you remember those videos that Nokia used to do on the future of mobile technology and stuff like that? There was one you might remember. It was, I think Microsoft did it. It was 2005, a video they produced on the future of banking. And in this video, you saw a woman, she gets in a taxi, and she's got some rich feature phone, and she's using a stylus on this to check out a car loan price or something. And then she gets out of the taxi, and she automatically pays for the taxi with her phone, just she's debited as she gets out of the taxi. Now that was 2005, and today we have Uber, which apparently the London cabbies love here in the UK, right? But Uber, actually that's an interesting point because Uber's been extremely disruptive, and I was talking to some of the London cabbies yesterday about this, and they're like, well, as long as Uber plays on the same level playing field as us, and there's a lot of angst about it. But I think the interesting thing about disruption for something like Uber was Uber didn't just disrupt getting from point A to point B. That was already a pretty well-established paradigm. They disrupted the experience. And sometimes in this space, in the banking and payment space, we look at things like payment form factor and other things, and we miss the opportunity to change the experience. And when we look back in 50 years' time at what's happened to the financial services business, we're going to identify that that's what changed. The way we considered banking, the way we considered finance, the way it worked, the experience of day-to-day banking was going to change incredibly. And at the heart of it is going to be, this is what's kicked it off, right? The smartphone. More than even the internet and other elements, the smartphone has this incredible ability to change the way we interact, the way we think about banking and financial decisions, because it's with us as we make those decisions. It's contextual. So, if you think about the technology we carry around in our pocket today, this is the most powerful smartphone on the market this year. It has a Snapdragon 805 processor, 2.7 gigahertz processor, which means roughly that this phone has the same processing power that HSBC had in 1985 as an institution. Now that's pretty incredible to think that we're carrying around these supercomputers in our pocket that have 2.5 million times the processing power of the spacecraft that took Neil Armstrong and Buzz Aldrin to the moon. Incredible power in this technology. So what do we do with all this incredible computing power? Well, we play Flappy Bird and Angry Bird and update our Facebook status, right? So the interesting side effect of this incredible computing power has not been to create just faster, better computing technology, but one of the paradigm shifts here, and I know you guys are going to be interested in this, of course, but with Steve Jobs and Johnny Ive and people like this, we've shifted to not just powerful form factors, but also beautiful technology, usable technology. And that's where the experience comes, from that usability, that interaction, that human factor element in it. It's really exciting, it's really interesting. But when we look back at those videos from 10, 15, 20 years ago, we thought the smartphone would be about content consumption. You'd see people watching movies, downloading songs. Oh, I forgot to order flowers for my anniversary, and getting on their phone. These are the things that we thought these smart devices would be used for. And they are used for that. And we also thought it'd be about the hardware form factor. I don't know whether you guys remember this. This was a concept from Nokia called the Morph, and this was designed as a phone that was flexible. Now we're seeing these flexible displays come into the market. Samsung's spending $2 billion reportedly on trying to build a smartphone that you can use as a wearable, right, around your wrist, unfold it and use it as a smartphone, unfold it again and use it as a tablet. Now, surely within the next 10 years, we're going to see exciting developments like that. But this is what we thought technology was going to be about 10 or 15 years ago. But we missed something. Something came out of this, and in social media is partly this, that we just didn't see coming. And that was using these devices for content creation. Now, this is something that we didn't anticipate. We didn't see this coming. So what other things are happening right now on these platforms that we might not have guessed might have been obvious, particularly in the banking and finance space? Because this has changed the way we perceive our world, this content creation. Suddenly we're all publishers, we're sharing, we're creating content. That's not what we expected the smart device of the future would be used for. That's an interesting time. So as a result of this content explosion, we've created new stars. You know, back in the day when I was a teenager, it wasn't that long ago, but you know, the stars that I observed growing up were the guys coming from MTV and the movie stars and things like that. Guys like Felix Arvid from PewDiePie on YouTube, these guys are the stars of today. Yeah, I'm very fortunate with the work that I do that I get to get on TV a bit and do some press and been in Wired before. And I even took my daughter recently to Good Day New York, where I filmed at Fox News, and I took her to the studio, and she's like, yeah, that's pretty cool, Dad. When she found out I was friends with PewDiePie on Facebook, she's like, oh, Dad, that's so cool, So the kids growing up today, these are their stars. This is who they're being influenced by. Look at his influence. This guy has 5 billion views on his YouTube channel. 10 million views a day. Now, to put that in perspective, some of you guys, the Voice series, the music reality show? In the US, we just had the finale for that. And their finale got 11 million views. And it cost them $2.5 million to put that episode on. CNN gets 1/20th of PewDiePie's monthly traffic. And their budget is almost $900 million a year. My guess is Pew's budget's probably less than $900 million a year, but it's just a guess. But these guys are creating incredible influence. And this has come from left field. We didn't see this coming when we projected these things 15, 20 years ago. So that's very, very interesting. But the smartphone is just the start of it. We're starting to see the emergence of wearables, other devices, and what's coming to the fore here is not necessarily, it's not just the form factor. Form factor's cool, but context. Sometimes we sort of think of these, the first generation of wearables are like smartphones that you wear on your wrist, but more and more we're starting to see these devices get more specialized, provide greater context, more specialization. When we think about financial services, what are those elements of these devices that's going to influence the way financial services develop? Well, I want to show you guys this. This is the SIO. This is a very interesting device. It's about the size of a USB stick. You sync it with your smart device. And you can use this as a spectrometer. It's got this massive sensor in it. So this is so intelligent that you can wave this across your meal sitting on the table, and it'll tell you the constitute calories that are in the components of your meal in front of you, right? And this is the sort of data that we're going to have access to in terms of making day-to-day decisions. We have medical tricorders. Some of you might be Star Trek fans. Like, the Scanadu Scout, which you can hold up to your temple, and it completes a measurement of your circulatory system, temperature, stress levels, all this information. What you get on a heart rate monitor in an ICU ward, we can get on our iPhones now. Do we really think that as in the financial services business, it would be better to get you to fill out an application form for your health insurance annually rather than collecting that sort of data? The possibilities of this are incredible. But the really interesting development is that we're starting to see intelligence emerge from this platform. It's not just about collecting data or giving you back basic content or information. We're starting to contextualize that information. We're starting to actually give back advice. Now, at the current point, it's fairly rudimentary, like this smart fridge, where it actually knows what ingredients you've got in the fridge and can tell you what the healthiest meal is you can make for a family of 4 based on what you've got left in the fridge. And it'll also order your milk when you run out. This is an example of contextual advice that's very simple, but works great in context. And we think about banking and the generation that's grown up with this technology around them, the kids who internet, mobile use, it's just part of their everyday life. How are they going to respond? Are they going to want to walk into a bank branch when they need a mortgage? Is that how they're going to respond? Well, I want to tell you a story about Hatsune Miku. You guys might have heard of Miku. This is an avatar pop star, and she's currently opening for Lady Gaga around the world. And by the end of this year, Miku will have had almost 10 million attendees at concerts that she's done around the world, like this one in Sapporo in Japan, which had about 40,000 kids at it. She's performed here in London, in Toronto, in New York, in Paris, all around the world. Now, the story of Miku, in terms of how she came to popularity, is a great example of crowdsourced content and popularity and influence through social media. But I want you to think about the Millennials and the Gen Ys, the kids who will go and rock out at a concert with an avatar. And think about how they will operate in the world and perceive advice. Do you really think that kids that will go and watch an avatar perform at a concert would prefer to see a human in a bank branch? Those days are over. So we've got to start thinking about the delivery of the service component of financial services in a different way. And it's got to be about this advice component. So in the past, this is what we said. We would get out and we'd say, hey, we've got the best rate, we've got the most branches, the most ATMs. These are the elements that we would sell to try and get you engaged. But that sales funnel fundamentally breaks down in this new world. It just doesn't work anymore. It's the death of campaign marketing for sure, but it's the death of the funnel, because this mechanism of we'll tell you we're a great bank and you walk into a branch to sign a piece of paper, that's essentially destroyed. Why? Well, if you think about it, today any bank that still uses a paper application form is actually absorbing an unacceptable level of risk today. Why? Because based on all of this data that's flying around out there, I can bring so much more data to the problem of identity management or understanding who you are as a customer, that if I limit it now just to the data set I can collect on an application form with a signature, I'm accepting risk. So that's interesting. And least of all, I mean, it's 1/4 of kids coming out of university in Europe today don't even have a signature. When you ask them to sign, they write their name. Why? They don't have to sign for anything today, except for banking and maybe real estate transactions. What do you need to sign for today? And a signature is not really a great form of identification anymore. If you want proof of that, look at the United States. US is 10 years behind on the EMV rollout, as you guys know, right? But think about it. They do 25% of the world's credit card and debit card transactions in the United States, but they carry 51% of the fraud. Why? Because they still rely on signature. So why are we still asking people for a signature? Why do we ask them for an address? What do those data points mean today in today's world? They're artifacts of the old system. We used to think, when we looked back 10, 15 years ago, even 5 years ago, we thought mobile was about putting a plastic card in your phone. Now you're going to be able to throw away your plastic and use your phone as a credit card. That's what we thought mobile was about. Or maybe, we can shrink internet banking down onto a smaller screen. This is what we thought the smartphone was about, but we didn't see the real trick coming. The real thing is the smartphone's about engagement, because you can carry this around day to day. And what we've observed with Movin as we've launched this is the customers who are using Movin are using it 3 to 5 times a day. Now that's pretty phenomenal opportunity to engage and give potential advice when and where they need a financial solution. Could you do the same thing with a branch? No way. So now we have a situation where mobile could actually be better, more timely, give you better context from a financial services perspective than any branch network or conventional approach to banking could ever do. And we didn't necessarily see that coming. And that's the really exciting thing. So context is the key to this. And this is going to produce some new ways of engaging and selling. But the top 5 jobs that will emerge out of this, just quickly to wrap up. The top 5 jobs that will emerge in this new contextualized banking environment. Obviously, data scientists figuring out where the numbers are, what's the important data. The storytellers who can build those experiences in real time to solve your problem as they present itself. Behavioral psychologists that understand the behavior, how you're going to respond to particular messaging. And risk becomes a function now of a program. It's not a risk officer ticking a box on a loan application anymore. It's now built into that ecosystem. And finally, the community builders who can tap into those influencers like PewDiePie and others. This is the really exciting opportunity. So before I finish off today, I wanted to give you guys some exciting news. It's actually a global exclusive for Wired. We're announcing this for the first time today. But Moven's proud to announce that we have closed our A round, right? And it's an 8 million round led by SBT Venture Capital, supported by Anthemis, Route 66, and New York Angels and a few others. So that's big news for us today. And we're going to be using this to expand Moven offshore in markets like Canada and New Zealand in the next few months. So that's pretty big news for us. So just before I finish off, Breaking Banks is the new book. Have to do a bit of a plug. And we run a weekly podcast radio show, which I'd love to have you guys come and participate on, either as part of the audience or directly as interviews. And we now have 100,000 listeners from 72 countries. So thank you very much for the opportunity.
Thanks, Brett, and congratulations on the raise. I just want to ask you, you're building a new kind of bank. What's the hardest bit about that?
Apart from raising money.
Sounds like you're good at that.
Well, if you'd asked me before I started out on the entrepreneur space, and many of you will know this, is I never really understood how much time I'd have to focus on spending money. I mean, not spending money, raising money. Spending money is a bit easier, no. That was the toughest thing, I think, for me as a learning curve. The other element of it is that, I guess it's the Sun Tzu factor. You know, you have all of these ideas, but what you can actually get out there, what customers actually adopt, and what they're interested in, you know, sometimes those things are not aligned. So it is a process of constant adaptation as well as part of the entrepreneur cycle.
And how much of a challenge is it dealing with regulators if you're trying to create something new?
You know, actually, we've taken a different approach to this, which we've been very proactive with the regulators, and we went up front to them, told them what we're doing. They had some advice for us, and we've actually never had an issue with the regulators, surprisingly. I think part of the issue with the mainstay banks is that they're very nervous about telling regulators things because they might say no, and they might. You know, so compliance is sort of this, well, let's not do anything to upset the regulator, but they're not very proactive. We were extremely proactive, and to the point where the CFPB, the Consumer Finance Protection Bureau in the US, they really loved what we're doing because they thought it, you know, created financial inclusion and that advice component. And they said, look, we love what you're doing. If you ever need a regulatory waiver from the other regulators, let us know and we'll be in your camp. So we've had exactly, you know, the opposite to what you would think.
Last question from me. Moven is challenging the incumbents. You're coming in there doing things in a smarter, more nimble, more agile way. But the barriers to entry are collapsing. So what's going to protect Moven from new people coming in and taking your market?
This is a good point. I mean, I think you have to keep moving forward at a pace where you keep setting the lead, and I guess that's also a challenge. But interestingly, in the United States, that sort of the thin DDA, the prepaid space, it's actually getting harder and harder to find bank partners right now. So we're actually in a situation where there's less competitors coming into the space than there might have been a year or so ago. I think that's going to change though, particularly as we start to see things like the e-money license in the UK and the separation of the distribution and manufacturing components. And I think for us it's just continuing to adapt to consumer behaviour.
Thanks very much, Brett King.
Thank you very much.